Hello friends, welcome back to my channel. Please like, subscribe and also press the bell icon. So one of my viewer actually asked for the latest developments on the IRB INVIT Fund. So since I covered this trust when it was almost like at 53 rupees. So that time actually I said that we may get a portfolio dividend yield of 18%, but I was little bit wrong because as one of my user also commented in the video, so because of the dilution the dividend yield has little bit come down. But however, the good news is that I think it's kind of a consistently they're going to increase the dividend yield now onwards. I think if you see the inflation, it is almost like 7%. But however, IRB INVIT Fund, we are going to increase the dividend yield by 5% for some years, and later on I think dividend yield will increase every year 10%. So if you have got at a very good price, so your cost will keep on going down. The each year whenever they pay out the dividend at the distribution at the quarter end, so your cost will keep on going down. So those who are looking for regular income on a quarterly basis, so they can still accumulate. And also, if you are reinvesting the same to buying the same IRB INVIT fund units, so your dividend will also increase. Let's say if you got some 100 units in the beginning of the year, so then I think at the end of the year they will issue at least they will pay out some 1.5 rupees in each quarter. So if you reinvest that, so you will get some units. Again, these units uh, in the next quarter again they will pay out 1.5. These units also will get that 1.5 rupees. So again it will become, I think, 1.5 rupees what they paid in the beginning, what your units got. So that will again give you back like another 3 times the units. So that's why I think it's kind of a compounding effect will come. So if your cost is less in this IRB INVIT Trust fund, if you have bought it at the very good level, so then I would suggest you to, and also if you're looking for regular income, I would suggest you to not to sell it out. So let's quickly come back to the video. So currently the price is 62.5. So it is actually kind of keep on increasing, and it's also consolidating almost like it's also a little bit rising, but between 61 it is consolidating from December. Earlier I think it was a 60 or something. It has a little bit come up from almost, if you see from 6 months, it is consolidating. And yeah, this is regarding the movement of the share price. So however, what I want to say you is the latest developments. So if I come back to the con call summary, which was done in November by the management, so they acquired 3 additional units. I think if you see here, Apur Moradabad, Kaital Rajasthan border, and Kishgar Gulabpur. These three additional assets they acquired, toll road assets. So they spent almost like 8,436 was the enterprise value. So on that actually they also spent, I think, 44,000 or something. I think they have spent to acquire these units. So one good news is that, as you can see here, this is the good news, 14 years to 17 years. That means this, whatever they are going to pay currently, 1.5 rupees per quarter, as of now, I think this will also keep on increasing slowly. But at least another, now we are in 2026, another 4 years, it will be increasing at a 5% yield. And from 2030 onward, this will increase every year 10 years. 10% will increase from 2030 onwards. At least till then also it's fixed that actually 1.5 rupees is fixed. So this is fixed for 17 years. I think the earlier 14 years was there. The after 14 years these units were, these assets were expiring. Now it has been increased to 17 years. You can think of 2026, if you add another 17 years, I think your income is fixed till the time. You don't need to worry at all. Of course, there will be some risk like like COVID time and all, where the collection of the toll itself was actually kind of stopped because of the movement of the vehicles and all were not there because of people were staying at home. But this is very 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 rare case. It's kind of once in a 20 years or once in a century kind of thing. I think once in a century only. I think, I don't know when I heard last time that everything was stopped, people had to stay. I think this was kind of unfortunate. I think once in a century kind of event, I think. So now total they got 9 operation road assets. So they got 8 BOT and 1 HAM. You can also Google it and search it. I think what are these details. Total they got 9 units, and they are also going to acquire another. So as I said here, 4,250. I think that's what they have spent for acquiring this three assets. So another good thing is they are already in pipeline to acquire. I think this is the posting of December 22nd. They're going to raise another 1,270 crores rupees to actually acquire another HAM unit actually. So that details also has been given by management. That's I mean, if they acquire that also, then it will become actually kind of a 10 assets will be under this IRB INVIT Fund. So let's quickly come back. So management actually guided for financial year 26. It is 6 per unit. I think I was a little bit wrong. I thought they're going to pay 2 units, 2 rupees per unit per year, per quarter. But I think this has come down because they also diluted the equity. So let's say if there are 100, they issued more equity units. That's why I think this payout ratio has come down. So the management also clarified in that con call saying that, okay, because the number of years is getting increased from 14 to 17, that's why the yield has come down like that. So that's why I think at least 1.5 is fixed per unit per quarter. This is fixed. But I think from financial year 27 onward, this is going to increase at least by 5%. So you can see here, I think another 5 years it's going to 5%, and after 5 years it will increase by 10%. I think this is the management commitment. So from 2030, I think that's what I said, 2030 onwards this will be increased. So out of that, actually I mean, as I also told, I don't know whether you are considering that or not. I think whatever the money they are paying, this 1.5 rupees per quarter, they are also giving the details like how much is the income tax free, and what is the tax you have to pay, like that. So still, if you see the worth of the this IRB INVIT Fund is NAV, its net asset value is 93 to 94 rupees. But sorry, the QAP issued, I think now it will come down to 75 rupees is the NAV, net asset value, but still it is trading at 62 or something like that. This is still undervalued. So once they start increasing every year and if they start acquiring the assets, definitely this will go up. It should match the NAV. I think there are two things now. One is the capital appreciation also will happen, even though it may not happen immediately, but slowly it will happen. Another thing is also you are going to get the quarterly income. So if you're looking for a regular income, I think I would still suggest you to buy it. Let's quickly come back to the dividend yield. Let's say, I think for this year, financial 26, they're going to pay 6 rupees. If you see current price also, if it is 62.5. So if I do it is into 100, it is 9.6%. But if you reinvest these units, as I already earlier explained, if you get 1.5 rupees, and then if you reinvest that back to IRB INVIT and try to accumulate the unit, that will kind of a compounding will happen. So that will definitely increase your yield to 15%. But if you would have acquired at 52 rupees when I told, now if you see 6 also, it is actually 11.5. And if you reinvest every quarter, if you're reinvesting that one, it will come to almost like 15% or something, 15 or 16%. I told 18%. I thought they are going to pay 2 rupees, but they reduced it. But however, I think next year onwards, at least they should pay 6.5 rupees. So even at current price, if you see 10.4 is the yield. Yeah, 10.4 is the yield. So, but still it is regular income compared to FD and all. This is a good investment. Apart from that, there is also some of the amount from this, whatever they're paying out, it is tax free. If you remove that, I think this is still a very good investment. I hope this helps. Thank you so much. Bye for now.